A very good afternoon to each and every participant who has come over here. The topic what we're going to discuss today is basically the influence of social media on financial investment decisions. Well, it surely plays a key role for us because today the markets have become everything is available on the internet. So social media, kind of takes care of a responsibility as well to give us certain kind of knowledge, and how we are able to gather information from that's what the topic is going to be discussed about. First of all, just like to introduce myself. My name is Abhimanyu Arora, and I've been with this organization close to 5.5 years, and looking at the sales of investments and partnership, India and abroad. Zahid, can we go to the next screen, please? So today I'll just cover up particular. So how we do today is that, since the topic is of course not that vast, we'll have a 20-minute presentation today, followed with any kind of question which is Q&A, and we'll try to wrap this up in approximately close to 30 minutes. Well, something about hBits for people who have joined us fresh first time. Like to introduce Mr. Shiv Parekh, who is the founder and CEO of hBits. Well, his experience comes from City and Stanford Management. Uh, Graduated from Harvard, BS in Engineering Physics from Stanford University, Forbes 30 under 30, Business World Disrupt 30 under 30. And just to add a point over here, which he's not mentioned, he was actually the second time entrepreneur while starting hBits. Mrs. Sameer Bhandari, co-founder and CFO. He is a chartered accountant, batch 87. I am Ahmedabad, batch 99. Uh, Further, he's MD of co-chair of Global Market Sales Nomura back in 1998. He was head of Asia ex-Japan Nomura Securities, MD of JP Morgan, MD of UBS Singapore, AVP Bank of America, and that's how his journey has been with us. Next slide, please. Well, we have as well a very special person today because, like every time, I like to bring up a different topic. I guess last time we picked up a topic was FD bonds and uh, mutual funds versus the SM REITs. So I called in Mr. Zahid Buwandi, who is our director, brand and marketing. I'd like to give you a little brief about himself. Um, so we're happy to have him in this organization, of course. He's worked at Securities Limited as head marketing, G Money as CMO, Ideate Labs at head content strategy and digital marketing, Reliance Securities Limited head marketing, Dentsu director brand strategy, Hakudo director brand planning. Well, to his education, he's done MBA marketing specialized Mumbai University, senior management dig program from IIM Kozhikode. Of course, with such a brands, I would like to, of course, be happy to have such a talent with us today, who would actually guide us how the investments are done with the help of social media. What I as well understand with his lookout is that he's been the most influential brand leaders as per the World Brand Congress, February 2024. And I guess it's many more on the way if we talk about him.
So I'll take it from here. Thank you so much, Abhimanyu. Uh,
First
so
of all,
the
Zahid,
yeah.
welcome for this particular presentation, and we really look forward to get some insights about how investing into different categories, maybe financial, as your background has been really diverse, and of course, followed with so many awards. So that truly ranks us to listen to you and learn from you in a much more academic manner to how to go ahead and invest further in with the help of social marketing. Thank you very much
Uh,
for being here.
Thank you so much for the wonderful intro, Abhimanyu. And thank you so much for all the participants who have taken their time from their schedules to join us and get insights into this particular topic of influence of social media on financial investment decisions. So basically, if you look around, what's happening in our lives is we are getting influenced and controlled by social media. We consume a lot of social media. We follow a lot of handles. So what is happening is there's too much of information overload which is happening, and a lot of times we don't apply our brains and we stop being logical. So this is about my experience as a marketer, how it is influencing the investment decisions of people of different age groups and different platforms. So we'll cover one by one, and I'm sure you will find this enjoyable and quite insightful. And in the end, then we will take Q&A of whatever you want to ask related. So social media has become a tool for connecting, but also it impacts consumer decisions, especially the financial ones. And according to a statistic 2024 report, 71% of Indian millennials admit that taking financial decisions is based on a lot of social media content which they consume, which is good in a way, but it's frightening also in a way. And if you know, Google is the largest search engine and YouTube is the second largest search engine. So people are going to YouTube and a lot of videos, explainer videos they're watching for particular topics related to financial services. I feel in next 5 years, YouTube will take over Google as the most largest search engine. After before Google, I mean, it will overtake Google in next 5 years. And they look at many topics like best stocks to invest, what are REITs, what is SM REITs, XM REIT, explainer videos and stuff like that before even consulting the financial advisors. And all these platforms like YouTube, Instagram, and Twitter are shaping how and where our money is being invested. For example, suppose it is a very common thing for us to see a viral video claiming 10x returns in a small cap stock, and which got over 2 million views, and then you feel, oh, so many views must be authentic, and next month maybe there's a drop of 18% in that particular stock. So what are the most popular social media investment trends that we should see? Rise of influencers, where influencers are creating a lot of content for people who consume such kind of content, especially for financial services. And so there's a trend in assets as well when I say financial asset. So crypto stocks, commercial real estate, SM REITs, fractional ownership, these are the new trending topics going on. Crypto pumps versus Telegram group, real estate returns shared by Instagram. And therefore, if you look at the social media trends, you look at Reddit, India Investments has about 400,000 members discussing stock pick, funds, and reads on a daily basis. Yeah. And like platforms are creating cult followings, and there are a lot of good financial influencers. And there's a rise of DIY investing apps, media exposure. Some of the insights is, of course, social media is disrupting intergenerational. When I say intergenerational means different age groups, right? From older age to newer age to Gen Zs to millennials, everyone. And it is also disrupting transfer of wisdom on investing. So while the trust used to lie with institutions before, now it often lies with influencers. However, the risk doesn't change, only the perception of trust has changed. This is what the older investors ask. Is it safe when it comes to taking tips and advice from social media platforms? And this is what the newer ones ask. Is it trending? Right? So both have different points of views. So therefore, what's the generational shift? Older versus younger generation of investors. So when we say about generational shift, we'll talk about the features for both set of generations. Look at aspect, we look at the behavioral and the beliefs for both the segment of this population. So when we say social media use, so we're talking about passive consumers who are mainly on Instagram. So the older ones are on WhatsApp and Facebook. The younger ones are Instagram, Twitter, and Reddit. Older ones rely more on newspaper headlines, business news, channels, and advice from their relationship managers whom they are mapped to. While the younger ones rely heavily on influencers, reels, trending stock tips, and peer group validation. Right? So that's how both these target groups use social media. If you look at which are the preferred asset classes, so older ones still look at FDs, PPF, bonds, endowment policies, mutual funds with focus on debt, not equity. And the younger ones, they directly, have equity via apps. So if you look at the COVID period, the largest amount of customer investor acquisition was done by stock exchange, stockbroking companies, because people were sitting at homes. There were apps, and that's why they used to trade in stocks and maybe make money and use their time well. So of course, cryptos is an unregulated space. Then the REITs is a new kind of a investment bucket we should look at. Mutual funds, fractional real estate, SIPs, NFOs. These are the kind of asset classes which the younger people are looking at. And if you look at what are the decision triggers, for older ones, it is stability, tax benefits, guaranteed returns, what the bank RMs are recommending. When the younger ones look at ROI screenshots on social media, influencer testimonials, viral stock calls, meme content, and FOMO. If you look at the risk appetite, the older ones range from low to moderate, so they avoid equities unless backed by strong brands like SBI, HDFC, or Reliance. And the younger ones, they have a moderate to high risk appetite, and they are willing to lose money in search of higher returns. That's their behavior. If you look at time horizons, older ones have a long-term view on the investments, but for them, capital preservation is more important than returns. And for the younger generation, their risk time horizon is from short term to medium term, and they prioritize faster growth over guaranteed outcomes or guaranteed returns. For example, somebody say aged 55 sees a WhatsApp forward on say top 10 FDs in 2025, and they will not act. They'll go and consult their bank RMs, and they want them to compare and see whether what is right, what is wrong. Whereas if you look at a younger audience, they'll see a viral reel. For example, say invest 1,000 in this IPO today and double it by next quarter. So they buy via stock app within minutes. So they're like very fast in their decisions also. Therefore, they might be wrong as well. If you look at key comparisons between these two generations, so the trust is based on institutions for the older generations and influence and peers for the younger generations. Preferred platforms, so your older one is bank branches, newspapers, and for younger ones is mobile apps and social feeds on different platforms. The core need for the older ones is safety and predictability, whereas for younger ones look for access, speed, and engagement. Typical source of their advice would be, for older ones would be financial advisors or RMs, and for younger ones would be influencers, Reddit or Quora kind of platforms. And for validation, it is for older ones, they always prefer face-to-face meetings and one-on-one meetings, or maybe a call from their RMs. Where the younger ones, they go by likes, comments, DMs, and references from their friends and peer groups. So when we look at meme stocks and viral financial advice, here are some of the examples what I want to bring about. So there's a Instagram reel which says start SIP with just 500 rupees, become a crorepati. Okay. Now, what you should look at as an investor is that the reality? The math is technically possible, but only over a long period of time, maybe more than 35 years, right? Which they fail to clarify. So you should look at the final point, look at the math of the returns as well. Now, if a YouTube video says the small cap stock will become the next Reliance, many such videos, especially in Hindi, drive thousands of retail investors to pump liquid money in illiquid stocks based on half-baked analysis or rumors. Now, if there's a crypto meme or for example, like a Dogecoin, so they might just say, "Oh, Elon Musk tweeted buy now." We keep seeing all these things, and people are actually doing it and driving prices of those cryptos also. So there are also fake WhatsApp and Telegram tips. So I don't know how many of you are part of WhatsApp channels and Telegram channels. So, for example, buy ABC Infra Limited. It's an insider tip, big announcement coming soon. That kind of a message will come, and often these come with doctored screenshots for successful calls and fake testimonials, which you should be careful about. Now, these examples, when I say, it brings about how emotion, virality, and peer influence can often replace due diligence in modern investing. So, as an investor, you must learn to pause, verify, and then act, and not the other way around, right? Don't act and then regret. Having said this, the SEBI has also come out with a lot of guidelines to protect the retail investors. So, for example, SEBI prohibits unregistered individuals from offering investment advice on social media. So, in April 2023, SEBI mandated disclaimers for financial content posted on YouTube and Instagram. Also, violators can face fine up to 25 lakh under SEBI guidelines and regulations. SEBI always encourages to cross-check advisor registration on SEBI portal. And for example, one of the influencers was fined for charging users for tips through Telegram without SEBI registrations. So there is a regulation which is coming in slowly for all the platforms. Now, what you all should know as investors, and you should ask before acting on social media advice is this: you should differentiate between opinion, okay, and always check source for credibility, data background, check whether they are SEBI, RBI, AMFI, IRDA registered or not. Uh, Also, influencer promotions are not endorsements. Please remember. Also, is this content based on data or on hype? When I say data, whether it is a historical data to back the claim. Has this person posted credentials or SEBI, RBI, all the regulated entities registration number, right? So, for example, if you look at doctors and chart accountants and lawyers, everybody has their registration number, right? Likewise, for all the financial bodies, also they have to be registered under whatever falls in your purview of regulation. Otherwise, it becomes an unregulated entity or unregulated person giving you financial advice. And also, are they making absolute promises like guaranteed returns or double in 6 months and stuff like that? And you need to be careful of psychological triggers, like they will try to create a FOMO or an urgency or fear or excitement and stuff like that. And for example, a meme might tell you invest 10,000 in this stock and get 1 crore with zero risk or timeline. So, what is shaping India's investment landscape today? One is traditional fixed deposits, gold, mutual funds has always been people's preference. But the emerging ones now in your investment basket is REITs, fractional real estate, ETFs, and startup equity. And Gen Z's appetite for high risk, high reward options are like coming out prominently. When we look at the landscape pre 2010 era, so what is the mindset in terms of what are the insights? Let's see. So the trust anchors earlier were banks, LIC agents, family CA. The top choices were, of course, FDs, gold, PF, and post office schemes. So the main motivation was either tax saving or capital protection or maybe long-term planning. Risk tolerance was very, very low because they wanted to preserve money, earn less than lose money. And the behavior was typically, at the time of annual tax filing, let me see where I've invested and what are the returns, stuff like that. For example, a 45-year-old person earning 10 lakhs would put 1.5 lakh in PF, 3 lakh in LIC, and the rest in FDs for peace of mind. That's the behavior for this kind of a traditional mindset. And there were 103 trillion amount of rupees still parked in bank FDs as of FY24. This is the RBI data, and 1 trillion rupee equals 1 lakh crore of rupees. So imagine the amount of money which is parked, which is not invested in asset classes which would give you handsome or decent returns. FDs give you the most poorest return, but it, of course, people who are in FD want to play safe. But this is the amount of opportunity which lies with the investors, and most of you must be falling into this category or must have parked money in FDs. But this is just to give you a data reference. Whereas if you look at modern investment preferences, which is 2000 15 onwards is like platforms used are all fintech apps like Grow, Zerodha, Kuera, hBits. We are a new age platform. Small Case is a new age platform. Popular instruments, mutual funds, SIPs, direct equity, ETFs, REITs, fractional estate, ownership, digital gold, and crypto. And the motivation is always financial independence, faster wealth creation, and of course, liquidity. Risk appetite is medium to high, so higher risk, higher reward. That's what they believe in. And the behavior is DIY, investing through apps after watching YouTube reviews, explainer videos, Instagram reel explainers, and stuff like that. So, for example, if a 28-year-old salaried professional watches the reel on how I made 50 lakhs in 5 years via SIP and starts a few 5,000 monthly SIP in a small cap, that's how they behave. And India added over 6 crore mutual fund folios between 2018 and 2024, largely driven by digital and social media penetration. If you look at comparative overview in terms of attribute, in terms of traditional and modern behavior, so this is what in terms of returns expectations are. So accessibility for tradition is heavily offline induced, whereas for modern is 100% digital onboarding. Information source, like I mentioned before, control is very passive for traditional, and modern ones actively monitor via dashboards and apps. And portfolio comparison for traditional investors are 70% fixed income, 30% growth, whereas for modern it is 60% growth, 40% can be liquid, fixed or liquid. So older generation will ask, will this help my retirement? Whereas the modern ones will say, can this beat inflation? Now, if you are in this mindset where can my returns beat inflation, you're in the right track if you are thinking like that. Some of my thoughts which I want to share is that modern portfolios are more agile, but also more exposed. So the key isn't to abandon the traditional instrument, but to create hybrid strategies where, for example, SM REIT is a new platform for investing. It's a new asset class regulated by SEBI. Have that also part of your portfolio. Have stocks as part of your portfolio. So you need to complement stability with growth. So this I have covered before. So also KYC onboarding via social media ads has led to a 60% surge in account openings for DMATs in Q1 2025 for new fintech platforms. So what's the investor psychology when it comes to social media? So there's instant gratification, there's likes, comments, it creates an illusion of accuracy. There are a lot of snackable bites. When I say snackable, it means short form content which creates overconfidence without depth. There's echo chambers. Even the algorithms feed what you want to hear, limiting diverse perspectives. FOMO, fear of missing out. So you say, oh, you missed Bitcoin, try this new altcoin. Missed this IPO, here's another one. Examples is during one of the food delivery IPO, I don't know name the IPO, multiple social media posts led to first-time investors to apply without even knowing the basics of valuation, and the IPO opened at below the listing price. So people who applied like lost money because of this social media influence. So let's differentiate facts between myths. So the myth can be like this stock will double in 2 weeks. The fact is no one can time the market. Now there's a classic saying when it comes to stock market. It says you should not time the market, but you should be in the market for a time. Remember that it will help you in your life as long as you're investing. REITs and fractional ownership are unsafe. It's not, they're regulated by SEBI, and a risk depends on the asset class. And also always look for financial disclosures, SEBI links, and verified data. Now, if you want to decode the noise, so like only rich people can invest in real estate. The fact is, platforms which sell SM REITs, where you can own a fraction of a commercial real estate, it starts from 1 lakh rupees onwards and multiples of 1 lakh, 10 lakhs. SIP is always better than lump sum. Depends again on market cycle and personal goals. YouTubers are better than bankers. only SEBI registered, RBI registered, AMFI registered professionals can legally advise. Is higher followers equal to higher expertise? Not at all. So verify credentials over popularity. So when it comes to all this information which is happening, misinformation and correct information, people are getting confused. So there's an effort on the platforms also to control this. So some of the measures which these platforms have taken is, now YouTube labels investment content under education only disclaimer. Instagram is testing financial content tags and warning on viral tips. Twitter or X, which we call now, verified accounts are still unregulated content, but they say user discretion is important. And Facebook is promoting verified financial literacy pages via Meta's Trust India campaign, India Trust campaign. But again, still it is a largely unregulated influence zone. Some of the insights and tips which I want to give for investors like you is, don't act immediately, don't bookmark, verify, and then decide. Use all these regulated entities like SEBI, RBI, AMFI, IDF portals for validation. Avoid secret tips groups or one-on-one DMs on any of the platforms. Educate yourself before you invest and learn the basics. You should know certain vocabulary of financial terms like compounding, inflation, risk appetite, and stuff like that. Build a diversified portfolio, not a trending portfolio. Avoid advisory influencers with no track record or registration or qualifications to advise. Now, if you look at how hBits has built trust for new age investors, so hBits is asset transparency is there, real estate properties, legal due diligence, yield history, flow plans, SEBI compliance is there, which is builds trust like a mutual fund model now. There's always regular investor education with respect to webinars, explainers, videos, dashboard, walkthroughs, and stuff. Therefore, what you should know is social media, while it is a powerful tool, you have to use it very, very wisely. You have to be curious, but also cautious. And influence should lead to research, not reaction. Social media is powerful, but not a substitute for financial literacy. So engage with licensed professionals or companies. And popularity is not same as expertise. Verify before you amplify. Diversify and don't dramatize your portfolio. And you should always stay informed, stay invested, but on your own terms. So if you look at nowadays, you hear a lot of caller tunes on your mobile when you call someone, advising, don't fall for links, don't click links, don't fall for these tips. There's a campaign by RBI using Amitabh Bachchan saying, be cautious and be informed investor. Now, if you have any questions, we are happy to take any questions.
Well, that's been a quite an input, and I made my notes out of that presentation. Well, I was surely working on the influence driven, that I'm going to correct myself for my personal that's the thing which is there. But yes, you're right that myth is very different to facts. Let's look at some questions. I'm new. What does hBits offer to investor? Just to let you know, Mr. Vikas, we were a fractional ownership company dealing into previous commercial properties, uh, and we were kind of giving you that particular revenue on a monthly basis, in which not only the rental incomes comes to you, and at the end of the tenure, which is a 5-year tenure which we fix, we give you the property appreciation as well. Well, that's what we do. With the current new thing which has come is that we have got a SEBI approval, and all our old assets practically are getting moved to SM REITs. So this how REITs was before, and there is a new category which is created at SM REITs, which starts from 50 crores to 500 crores, and that's how it is.
Satish was saying voice is not clear, so AB will have to say again.
That's what I saw. Thanks, AA. Have we launched SM REITs already in the market? Well, we are in the process of doing a due diligence on the property, and I guess for us, we should be launching a product probably another 90 days from now. We are at the, I should say, the final stage of deciding the product. And we will surely come back to you. Let's not, rush on that and, break the surprise for all of you. So let it be there, and we will surely getting that. But please, for any information, request to please be in touch with your investment manager or portfolio manager. And we will please follow us at LinkedIn or other platform where the daily updates come to you whenever there is anything which we have to update you. SM REIT, is it regulated by SEBI? Yes, very much regulated by SEBI, sir. This is question was by Mr. Vilas Shinde. Well, I somehow feel, the topic which we have discussed this time was basically more of a learning, right? And the earlier topics was basically in line to the financial interpretation. The people were more curious, Zayed, uh, that how the asset class, how SMBs and everything were working. So that's why a few amount of questions, which is basically you have actually given an education rather than any other thing, just to let you know. So I'd like to thank everyone over here to participate at this particular presentation. We'll be sharing this presentation to all our registered webinar part. And thank you very much again for taking out time. Thank you, Zahid, for taking out time for us and giving us this insight. As I mentioned, I've already taken a few notes on that. I had a question as well, though, but I'll probably ask you offline. The YouTube channel sounds fancy. Is it really working?
Yeah, absolutely. So, like I said, after Google right now, YouTube is the second largest search engine. And if you look at people are asking and watching, it's like, the behavior of people on Google and YouTube is similar. It's intent driven. So if you search anything, suppose you want to travel, you will search the best places to visit in Europe, for example, right?
Mm.
uh, e- Google will throw the result. Similarly, if you say, I want to learn cooking on YouTube, or say, which are the best new age asset classes for 2025, if you type on YouTube, YouTube will throw a lot of content for you. So,
Great.
as a platform, it runs on algorithm, but the content is not controlled, unfortunately, by the platform, right? There are measures now coming in place, but right now it is still largely unregulated. That's why they're saying, oh, you need to have a disclaimer. That's why for SEBI has come out with a financial influencers regulation where they have to be a chartered accountant to dispense financial advice. So yes, a lot of people are going on YouTube and watching and learning stuff. So most of the learning, unfortunately, when it comes to financial, because it is to do with your money. If you want to learn cooking, it's fine. You're learning something, you're not, you know, losing money. But when it comes to financial services, these channels, you need to be very, very cautious. While it's a great tool to learn, but if you learn from unverified sources and therefore do your investment, planning, you might land up in a suit.
Noted. So we have a question from Mr. Vikas. Yes, great. I know hBits has been helping investors on real estate. What has been our return to investors over the last 3 years? Well, of course, performance track record is a key thing to look at whenever you invest. For us, if I look at the performance track record is basically on two particular lines. One is basically the exit of the property, and second is basically the ROI of the property, which we have mentioned in the brochure at starting of the contract. Well, just to give you information that the ROI which we have mentioned on the brochure while we started the contract has been the same, which generally runs between anything between 8 to 10% depending on the project. And on the other lines, when we talk about exit of the property, so we have done one exit of the property wherein the targeted IRR was 15.54 and we had delivered 17.54 in a matter of close to 3 years. I like you to as well. Please visit our website. There's a lot of information blog which we are creating on that. Uh, Mr. Ashish Dattare is asking, thank you for your thoughtful presentation. So this question is for you.
No, okay, fine. So, Ashley has written, how can I see OHC LCV data for similar assets on NSE website? Is it from liquidity perspective? So, Ashish, I don't know what asset class you're talking about. Basically, NSE is only for stocks. So, NSE will have a data for particular stocks, whatever you want. Yes. And from liquidity perspective, you'll have to check NSE website for that.
Sure. So I'll add some point to it. So like SM REITs will be listed on the exchange, could be BSE or NSE. Yes, it gives you improved liquidity. I'm just talking about the SM REITs section. Mr. Narsimha Rao B has asked, can we take loan against SM REITs similar to mutual funds? Uh, well, that's a question which is surely, have been asked by several clients at the moment as we speak. But let's see as we grow and I see REITs, there is some kind of a loan value. It could be a possibility for sure, but I cannot comment anything at this moment because we are yet to see how it grows. Perfect. Thank you everyone again for joining in this afternoon, taking out time. Thank you, Zahid, very much.
Thank you, AB. Thank you, everyone, for joining. Thank you so much for your time.
Thank you very much.
Thank
Bye
you.
bye. Have a great day ahead. Bye bye.
Thank you.